Hi all, this is Steve here from the BERT and SIPS office. As many of you have heard, we've had a new tax ruling come through that we've been administering for redundancy payments from the 1st of February. Several years ago, the fund applied to the Australian Taxation Office to seek a private ruling with how our redundancy payments are taxed. The fund was successful and the ATO agreed that redundancy payments made by the fund, where they're made to people under the age pension age, should be classified as genuine redundancy payments. Genuine redundancy payments are tax-free up to a tax-free threshold. The fund has now been administering this tax ruling from the 1st of February 2023. However, and thankfully, the ATO has agreed to backdate back to the 1st of July 2020. And what this means is that any member who received a payment where their redundancy occurred after the 1st of July 2020 will now be eligible under this ruling. Over the coming weeks, we'll be communicating with members that are impacted by this change. Over the following weeks, the fund will communicate with each and every single impacted member. We'll be communicating via letter, via email, and via text message. Emails and text messages will encourage members to use our online platform, Bob, to download their new tax documents. The letter will include these new tax documents as well as important information about the change. The letter also contains two very important attachments. The first being an amended eligible termination payment. This document instructs your tax agent or accountant to nil out the original payment. The second document is a corrected PAYG payment summary. This instructs your accountant or tax agent on how to re-report the payment in its correct form. Whilst there are a number of different ways that members can re-lodge prior financial year tax returns, we strongly encourage that you use the professional services of an accountant or a tax agent. In fact, the fund has also sat with a member and their accountant to run through this process as a test case. It was a process that took no longer than 15 minutes. It's also really important that you take both attachments with you when you go and see your accountant. We've also placed important information for accountants and tax agents on our website. The ATO places a 2-year restriction on individuals going back and amending prior tax returns. So for our members who are in the 2020-2021 financial year, this is especially important as your 2 years is coming to an end. For those members, we strongly encourage you go and sort this out before the 30th of June. If you wait too long and you fall outside of the 2-year rule, you will need to lodge an objection with the ATO. And the information that we've received is that that will be a very difficult task. We expect that members will get most of their over-withheld taxation back when they re-lodge their prior financial year tax returns. However, because we're dealing with personal financial circumstances, there could be a wide array of outcomes to this. Things that can impact this include the levels of work that you did throughout that year, other sources of income, as well as whether you have any tax debts outstanding. No, unfortunately not. The tax ruling that we received only applies to redundancy payments made to members because of a redundancy on or after the 1st of July 2020. Other payments such as hardship, leaving the industry, and those types of payments are not included in the tax ruling. If you have any further questions, please log into Bob or grab us out on site, or otherwise call our contact centre on 1300 261 114.